Let's go to the email inbox as we wait for those calls to come in. We'll go to Pat. Pat is in St. Thomas, Ontario. He writes an email that reads as follows. If we think we are heading into a market downturn or recession, is HDGE on the NASDAQ, that's HDGE on the NASDAQ, a good strategy to include in one's portfolio? If so, what market indicators should we look at before taking a position in this ETF? Second question, is there a Canadian equivalent to HDGE? Larry?
Okay, so that's a great question. And HDGE is basically an ETF that finds some of the weaker companies out there and is outright short them. A couple weeks ago, Paul, we did an educational segment, and I talked about a market-neutral sort of long-short ETF that I recently added to my sleep-at-night portfolios. And in Canada here, QBTL is the symbol for that. And what that ETF does is it's long, low volatility, good dividend paying type stocks, and it's short, high beta, overvalued stocks, but market neutral. So it's long about 100 stocks and short about 100 stocks, but gives you a negative beta because you're shorter some of the riskier, more overvalued names. And it also has a positive yield to it. So it's a better way, in my mind, than HDGE to play a negative environment. And so I've been using that ETF. I really like what they're trying to do in that, giving you market neutral exposure with a bearish tilt, i.e. if the markets go down, you'll go up. You're not necessarily going to gain much if the markets do well, but there is a bit of a positive yield carry to that portfolio. The equivalent in the U.S. is I think it's BTAL is the ticker there. So I really like those market neutral alternative type strategies in this environment. In terms of what indicator you look for, listen, you can't time markets. I've been negative on the market outlook for a number of years now, and to be outright short or in cash isn't the right way to think about things. So is there one indicator that tells you when to do it? The answer is absolutely not. But should you be tilting your portfolio to be a bit more defensive, a bit more sleep at night in this environment? And my answer to that is undoubtedly yes.
Can we be clear on which one trades in the U.S. and which one trades in the in Canada? HDGE, which is the one the viewer named, is the Advisor Shares Equity Bear. It trades in New York. He asked, is there a Canadian equivalent? Is there?
Right. So QBTL is similar in that it's shorting companies that are overvalued, but it's also long some companies that have good value and good dividend yields, so or low volatility. So it's more of a market neutral strategy, but it's a similar idea into what you're trying to accomplish in your portfolio by owning HDGE.
Right. And QBTL is traded in Toronto. Mark is in Belleville, and he is our first caller. Mark, thanks for calling our program. What's your question for Larry Berman down in Florida?
Thank you. My question is on the BMO ETF ZPS. A couple months ago, I called Larry and talked about ZST. I didn't like the downturn in CST, but ZPS seems to be more stable. Realize over the next 5 years that as it replaces bonds, the bond yield will be a lot less than it is today. But if Larry can comment on ZPS versus ZST, appreciate it. Thank you.
That's ZPS, the BMO Short Provincial ETF.
So with provincial bonds, you get a little bit of extra pickup versus traditional government bonds. So there's a little bit extra yield there, but they're short-term bonds, right? So you're not getting a lot of interest rate sensitivity. And in my mind here, you actually want some of that, because if we are going to go into a bit of an economic downturn, then you want more interest rate sensitivity in your portfolio. And I'd be more inclined to go into a ZPL for long provincials as opposed to short. I have no issue with the ZPS ETF. It's going to be a little bit more volatile than the ZST because there is a little bit of interest rate sensitivity when compared to the ZST. But for now, I would want more long bond exposure. And that's actually what I'm building in my portfolio with longer term bonds at this point versus shorter term ones.
Okay.
So hopefully that gives you some insight into my thinking on fixed income at the moment.
That's Mark in Belleville. Thanks, Mark, for your call. Let's go to Toronto now. Natalie is on the phone. Hi, Natalie.
Hi, thanks so much for taking my call, Mr. Berman. I've called you a number of times. I'm sorry to call again. ZWU, at the time when I called you, I got trading at 13.5. I believe it's closer to 15 now. I've been holding cash. I'd like to get the income and sleep at night. What should I do? Do you have a better name, or should I jump in? Thank you very much.
So ZWU is the is the covered call strategy for utilities, pipelines, and telcos. And at the time, and I remember your voice very specifically, you asking about that, and I said I liked it, but I liked it at a lower level, and it hasn't gone down, and markets have generally gone up. And I haven't added to it, and I haven't sold any. I really like the ZWU holding. But there's not a lot of value here in the holding, and it could easily pull back 10% in a broader market correction. BMO just came out with a new ETF that has covered calls in it as well, a bit broader, but it also has some put right in it, and it's a ZPAY, ZPay. It's going to give you a bit of a sleep at night ride, not completely, but putting that together with a ZWU is going to give you a nice diversified exposure in both. So you might want to look at having a bit of both of them. But are the markets cheap and are we early? And the answer is no. So I would be waiting for pullbacks to deploy new money here. And I think you just have to be patient. And it sounds like you've got a little bit of fear of missing out as markets grind higher. That's the emotional response to a market environment like this. And I understand that you need the yield in your portfolio. And this is why I say, like, never just go to cash. If you need the yield to live on, just migrate your portfolio to more defensive type holdings that will help you sleep a little bit better at night when we do go through those volatile periods. So have a look at ZPAY in the BMO universe, and maybe a bit of that and ZWU together might work for you.
Okay, thanks for the call, Natalie in Toronto. Doug is in London, Ontario, and he's our next caller. Hi, Doug.
Hi, good morning. Larry, I'm a holder of some of your ZZZD, and I'm not sure whether I should be buying more of that or diversifying a bit and maybe getting into one of its holding ETFs. I was looking at AMLP. Do you think it's a good time maybe to get into some of that? I'll hang up and listen to your answer. Thank you.
Right. So this is the U.S. pipeline infrastructure master limited partnership trust, and AMLP is an ETF that I own some of within the ZZZD. Whether you go into directly or not, your call. I'm nibbling away here. If we get a little bit weaker, I think the energy space is cheap right here. I'm actually going to be focusing on that today in the educational part of the show. And AMLP is a way I like it for people seeking good yield in their portfolios as a way to play it here. It's not risk-free. It's not there couldn't be more downside here, but I think there's value there, and AMLP would be a good way to play it. Much, much more volatile as an individual holding than the experience you're going to see by owning ZZZZ. So you make the call, but it's going to give you a yield in the 7-8% range after foreign withholding. So it's quite nice.
Okay, thanks to Doug in London, Ontario for that call. Let's go back to the email inbox now. Andrew is our email writer. He writes as follows. Hi, Larry. What's your preferred way to play China? And is now the time to start accumulating a position? And he doesn't say specifically, but he may be referring to coronavirus and the effect that that's had on markets.
Yeah, Paul, I would think that that's the case here. So a couple weeks ago with the big ETF conference here in Florida that I attended as well, I actually met with the founder of a company called Crane Shares. And they're a specialty ETF shop focusing in emerging markets and China in particular. And I would say go to the Crane Shares website and have a look at the many different ways to play China. They have an ETF that's playing China's Silk Road Initiative, i.e. they're investing and overweighting the companies that are likely going to benefit from that. So that might be interesting there. KBA is the way that I'm choosing to play China mainland right now, and that is the A-share market, which is fundamentally one of the cheapest markets on the planet from a price earnings perspective in China. And I nibbled a couple weeks ago in some of the weakness in KBA. So there's a number of different ways to play it. Have a look at Crane shares. They're probably one of the best in getting very specific China exposure into your portfolio.
Okay, let's go back to the phones. Gordon is in Chilliwack, BC. Hi, Gordon.
Morning. Can I get your opinion on U.S. mortgage insurers, specifically MGIC Investment Corps, and is there an ETF that handles those? Thanks.
I don't think there's a direct play in mortgage insurance here from an ETF perspective. I don't think there'd be a lot of interest in that specific narrow channel. Listen, we're late in the cycle here, but interest rates are going to likely stay low for a long period of time. So I don't expect a lot of stress in the mortgage markets. You know, you're kind of seeing what's happening now in auto loans. Similar to what happened a decade ago in housing in terms of people were stretched. You're seeing a lot of defaults in auto loans, and so we have a credit problem coming at some point. I'm not sure mortgage insurers are the way to go at this point from a market risk perspective in that part of the cycle. So I wouldn't be going there, and so hard for me to recommend that someone do that as well. Listen, I might be wrong here, but I would want to try to avoid that area if I could.
Let's go to Kingston, Ontario now. Sean is on the line. Hi, Sean.
Hi, Paul. Larry, how are you this morning?
We're doing great.
Super. Larry, I've taken profits from the U.S. side of my RSP. I'm looking for a sleep easy option to park until U.S. valuations become a little more reasonable. I was thinking about VGSH, but was wondering if you had another option. And would you add U.S. dollars to rebalance at this time, given the changes over the last month? Thanks so much. I'll listen to your call.
Great. So VCSH is a short-term corporate ETF in the U.S. that has a basket of really good high-quality corporates in the U.S. So pays a little more yield than say the government sector would at this point. It's an ETF that I've used in the past. I'm not currently exposed to that now. But as I said on the interest rate call, if you're concerned about equity markets and valuations and you're thinking there's a correction coming in the equity market, the best for a Canadian exposure is long-term U.S. Treasuries. Number of different ways to play that. BMO has a ZTL, which is a long-term U.S. dollar exposure to Treasuries, or you can go into TLT and buy it directly in U.S. dollars. And yes, I've been adding to U.S. dollars. So as the Canadian dollar was getting stronger towards 77, 78 cents recently, we're a lot closer to 75 cents today. I've been adding U.S. dollar exposure. I think at the bottom of the next trough over the next year or two, hard to time it specifically, the Canadian dollar is a lot closer to 70 and probably a little bit under 70 cents. So I do like the U.S. dollar exposure here.
Thank you to Sean in Kingston and all our other callers and email correspondents for a great set of questions, as always, here on Berman's Call. Coming up on today's educational segment, Larry tackles the question as to whether the environmental, social, and governance movement is causing mispricing in the market. Next.
Larry Berman is one of Canada's top technical analysts. He's the Chief Investment Officer of ETF Capital Management. To learn more, visit etfcm.com. Opinions expressed by Larry Berman are his own and do not necessarily reflect the opinions of BNN, its parent company, or affiliates.